All right, get more on this. We're wrapping up a big week in big tech, but the big move we're watching today, Intel. That stock is cratering after reporting disappointing second quarter earnings results yesterday, and the chipmaker suspending its dividend, laying off 15,000 workers. Joining us now to talk about this, Ben Beharin, Creative Strategies CEO and Principal Analyst. Ben, always great to have you on the show. So we look at this Intel print, Ben, miss on Q2, guided Q3 lower, massive restructuring. You say Intel probably, in your opinion, Ben, the biggest news of the week?
I think so, yeah. And I think it's because this was a bit surprising, right? I don't think this was something that people saw coming. Obviously, there was a note earlier in the week that was reported that some layoffs were coming, which I do think sort of set us in a position to brace for some pretty harsh numbers. But honestly, I think people had thought the worst was behind Intel. I mean, I genuinely believe that was a conviction by a lot of investors. And I think all this has done is proven that that's not true. And, I know they've been asking investors to be patient for a while, right? And just buy into the broad vision of the company and the product and roadmap for foundry and product. And I think this has just come into that's just really going to take a lot longer than hoped. And now there's a real big focus, much more than I think before, on short-term execution and product competitiveness.
And why, in your opinion, Ben, why is Intel we knew about the long build out of the sort of long foundry plan. We knew that was going to take a while. I guess the real surprise, to your point, is that they're not as competitive as they should be at this point with the likes of an AMD and others. What's going on there? Why aren't they?
So I think there's two parts to this, right? One, Intel has obviously been focused on their 5 nodes and 4-year strategy, which again was their process technology and products built on their process technology. And that's just process technology catch up, right? And AMD has been on leading edge process with TSMC, which many people, consensus view would believe that that is the best process out there to be manufacturing semiconductors on. And so the AMD has a process leadership, and while at the same time competing right there with product. That's what makes this next product from Intel super interesting, in my opinion, and one that I think there's going to be a lot of scrutiny on in terms of competitiveness with Lunar Lake, because that is the first product that Intel's making that's built 100% on Intel's TSMC. Now, Intel's packaging is putting that product together, but it's being made on TSMC wafers. And so this is the first time we'll actually see Intel's architecture on a one-to-one sort of competitive process with AMD, and we'll really get a look at how competitive those products are. So I think that's step one, but their ultimate goal is to also now have that architecture back onto their leading edge process, which the next one will be, I think, 14A in their nomenclature, and bring now product competitiveness back to process leadership at their foundry stage. And I think if all those things play out, very, very positive, right? That brings competitiveness back to their product portfolio, pricing leverage, as well as a dominant position to now increase their IDM strategy. But a lot's just got to go right. That's the thing, is that there's a lot of things that have to play in their favor, which is why, again, I come back to short-term management execution is key, and product leadership has to be identified in the market.
Ben, I want to switch gears here and talk about Apple, a company you also know so well, Ben. Just curious to get your take on that print. And also, Ben, just to see where you're at when it comes to kind of the argument we hear from the bulls, which is that, these AI-enabled features, Ben, they're going to really spark this very strong upgrade cycle for iPhone, and whether you buy that, Ben.
Yeah, I don't like the term super cycle, Josh. I think you and I have talked about this for a long time. I think really I would anticipate a stronger than normal cycle. So call it whatever we estimate typical refreshes would be without AI. I think it'll be a little bit stronger than that. I do think there'll be demand. I do think there's going to be enough interesting things around Apple Intelligence that get people to have interest in that, want to upgrade their devices. But I don't think we're going to pull forward that many more devices like we do if we can want to call it a super cycle. But I think it'll drive a stronger than normal cycle. And I do think Apple will be the tip of the iceberg for that. I think that'll impact positively for Qualcomm as well in the Android ecosystem. I think a lot of the AI on device stuff, again, coming to PCs too, which will help Intel and AMD as a part of that as well with Qualcomm. But I'm not going to call this a super cycle in any of those areas, but let's just say a stronger than normal seasonal cycle is possible.
Ben, I'm really interested to see how this sort of consumer AI cycle is going to go, or cycle or phenomenon or whatever it is, effect is going to be. On the flip side, when you look at enterprise, when you look at the companies that have told us what they're spending to build out AI this earnings season, and investors have not really rewarded them with the exception of Meta. And then today there was a write-up on a Morgan Stanley note on Microsoft that highlighted a pharmaceutical company that had pulled back on its AI spending on Microsoft products, I think specifically Copilot, because didn't see the productivity gains that it wanted to. And I just wonder how widespread that kind of pullback is going to be. You know, how much fits and starts is this whole AI rollout going to be?
Yeah, I think honestly at the software level, you're absolutely right. We're going to hear more of these stories, and it's going to be rocky. You know, we are really in a laying of, digging the canals for rivers, laying the streets for cities, laying the fiber right in the ground for telcos. Like that's where we're at. We're in infrastructure stage. While that's still continuing to develop, and we're seeing continuous development in terms of size of models, innovation in compute, the need for more compute, it's just really hard. And in my opinion, sometimes a little bit too early to kind of estimate what that's going to go from a software standpoint, because when you're early in a cycle, those lessons that you learn might not actually be the lessons that you learn over the long haul when you're making those software investments. So I think the software side is going to take time. We hear similar conversation from CIOs. We do our own CTO surveys. We see where their project spend is right now, what they're looking for in terms of productivity increase on top of that ROI for employees. There's still optimism. There are promising signs, but nobody is moving into full deployment yet. And until that happens, and I don't expect that to be mid to late of next year, if not into 2026, we're really not going to see this software cycle start to kick up, because we really need to get through this infrastructure cycle, which is being led by semiconductors, before we can transition into that software build out stage.
I'm curious, Ben, we've heard from all three cloud giants now, Alphabet, Amazon, Microsoft. What do we learn during this earnings season just about the general state of the great cloud wars right now?
Yeah, I mean, all of them continuing to go big on CapEx. It feels like they all believe that the more they spend in CapEx, the more they double down on that infrastructure, which I do think is interesting. All three of those names that you mentioned highlight their custom silicon, their custom ARM-based silicon, as well as part of that moat and investment in that CapEx. And so they're trying to spend and build out and create those moats with CapEx. And I don't see that changing. That continues to be a great story for all semiconductor infrastructure, networking, all of that. I think the challenge is still tying that to the software story. And that's why I still sort of come back to like this, the macro story for the data center refresh, the AI server build out for hyperscalers and even tier 2, tier 3 cloud companies on the back of the silicon infrastructure remains intact. The software questions still are going to be ones that we're going to wrestle with now still for another 12 months, if not longer, but we're still building out that infrastructure. So it's a good time to still be looking at infrastructure stocks, because I believe that macro thesis remains intact.
Building the canals, laying the streets. Ben Beharin, thank you very much. Appreciate it.
My pleasure. Anytime.